Today, we're diving deep into the financial landscape of 2026, a year that's shaping up to be pivotal for investors. We'll explore the top 6 finance plays that you need to be watching, investing in, or at the very least, understanding. Whether you're a retail investor, a fund manager, or a long-term passive player, this breakdown is designed to give you real, actionable insight. So buckle up, here are the 6 financial sectors, companies, and strategies you'll want on your radar for 2026. 1. Artificial intelligence infrastructure, nvidia and AMD. 2026 is not about whether AI will dominate, it's about who will power that dominance. And right now, nvidia and AMD are the titans of silicon. As generative AI models become integral to business operations, gaming, autonomous vehicles, and medical research, demand for AI compute is exploding. NVIDIA, with its H100 and upcoming Blackwell GPU lines, is the gold standard. It's not just selling chips, it's selling the picks and shovels in an AI gold rush. Meanwhile, AMD, with its MI300X and Zen 5 architecture, is rapidly catching up. What to watch? Data center growth, especially in hyperscalers like AWS, Google Cloud, and Microsoft Azure. Software lock-in, NVIDIA's CUDA ecosystem still gives it a major edge. Geopolitical risks, US-China tech tension could impact supply chains. However, the US has planned to lift bans, so this could encourage another surge. This sector is volatile, but corrections often present buying opportunities. Dollar cost averaging may be a wise strategy here. 2. Tokenized assets and blockchain finance, BlackRock and Ethereum. 2026 is the year TradFi and DeFi finally meet in the middle. Led by BlackRock's aggressive push into tokenized treasuries and the success of Ethereum's post-merge roadmap, we're seeing a paradigm shift. BlackRock's tokenized funds on Ethereum, like the BUIDL fund, mark the beginning of institutional-grade, blockchain-native finance. Meanwhile, Ethereum's Layer 2 ecosystem, driven by chains like Optimism, Base, and Arbitrum, makes these assets faster and cheaper to move. Why this matters? Tokenized treasuries offer real yield with instant settlement. Ethereum is not just a crypto play, it's becoming financial rails infrastructure. Regulation is tightening, but also clarifying, which could trigger a capital influx. Look beyond price speculation. Evaluate protocols and platforms that are building tools for real-world finance, KYC-compliant staking, on-chain identity, and smart contract auditing. 3. Energy transition, nextera energy and enphase energy. With net zero commitments ramping up globally, clean energy isn't a niche anymore, it's the next industrial revolution. And in 2026, US policy continues to favor renewables, especially solar, battery storage, and grid optimization. Nextera Energy, NE, is the largest renewable energy company in the US. Its diversified portfolio includes wind, solar, and natural gas, offering both growth and defensiveness. Meanwhile, enphase Energy, ENPH, is a solar inverter and storage technology leader, enabling decentralized energy usage at the household and commercial level. What to watch? Federal subsidies and the Inflation Reduction Act continuing to impact margins positively. Battery tech improvements and rare earth mineral access. Weather volatility and energy grid resilience. These plays often dip when oil prices fall or interest rates rise, presenting ideal entry points for long-term holders. 4. Private credit and alternative lending, Ares Capital and KKR. With high interest rates likely to normalize above pre-pandemic levels, traditional banking is being disrupted, not by fintech, but by private credit. Funds like Ares Capital, ARCC, and KKR are stepping into the vacuum left by cautious banks, lending directly to mid-sized businesses and infrastructure projects. Why this matters? These firms are delivering double-digit yield in an otherwise yield-starved world. As banks pull back, private lenders can charge higher interest with lower default risk. They also benefit from more direct control over deal terms and covenants. Risks: illiquidity. Many private credit instruments are not publicly traded. Recession risk: watch for rising defaults if economic growth slows. These are excellent income plays for cash flow-focused investors. Consider BDCs, business development companies, for tax-advantaged exposure. The next wave of finance isn't just decentralized, it's automated. Companies like Intuit, think QuickBooks and TurboTax, Adyen, European fintech rails, and Sofi, digital banking meets robo-advising, are turning complex financial tasks into automated, user-friendly services. 2026 will be defined by AI-powered bookkeeping and tax filing. instant underwriting and risk scoring using real-time data, embedded finance, where financial services are bundled invisibly into other apps. Why invest? Intuit has built a strong data moat with millions of SMBs. Adyen's modular fintech infrastructure is deeply embedded with top e-commerce platforms. Sofi is expanding its user base while reducing customer acquisition costs through in-house tech. Fintech is highly sensitive to rate changes and consumer sentiment. Look for signs of user growth and product stickiness, not just flashy announcements. As digital transactions scale, so do cyber threats. In 2026, cybersecurity isn't optional, it's existential. From crypto exchanges to Fortune 500 firms, everyone is beefing up the digital defenses. Palo Alto Networks, PANW, leads in network and cloud security, especially with AI-integrated threat detection. Meanwhile, okta, is a leader in identity management, handling authentication and access for remote workers, SaaS apps, and more. Key trends: AI-driven attacks are evolving, and defense must evolve faster. Government contracts and public sector adoption offer strong growth potential. Identity as a service is becoming a must-have for enterprises. These are secular growth plays with defensive qualities. When markets get choppy, cybersecurity often holds up better than consumer tech. Final takeaway. So, to recap, the top 6 finance plays for 2026. AI infrastructure, nvidia and AMD. Tokenized assets, BlackRock and Ethereum. Clean energy, nextera and enphase. Private credit, Ares Capital and KKR. Fintech automation, Intuit, Adyen, and Sofi. Cybersecurity, Palo Alto Networks and Okta. These themes are not just investment ideas, they're transformations of the global financial system. And 2026 is the year they begin to go mainstream. Always do your own due diligence. This is not financial advice, but a starting point for deeper research. Like, comment, and subscribe. See you next time.